Hi, I'm Keith McCullough, and welcome back to another Real Conversation. It's my absolute pleasure to welcome Ben Hunt to Real Conversations. First time for me, Ben. Thanks for making the time. I truly appreciate this.
Great to be here, Keith. Thanks for having me.
I was doing, as we were just talking, I was doing a little studying and measuring and mapping on Ben Hunt, and I found, amongst other things, that we're almost neighbors in Connecticut. So that's cool.
Isn't that crazy? I had no idea, Keith. It's fantastic, and I understand you've got 4 kids as well.
Yeah, and they're still putting up with me, and it sounds like your kids are putting up with you. I love how in your writing, by the way, that's woven into your because it's real, right? And I think that's what at least the audience, pre-audience, was letting me know. A lot of people are excited to listen in on this, and they love how you write and how you're just keeping it real. A lot of people, obviously, on, as I affectionately call, the old wall, aren't even allowed to do that, even if they wouldn't keep it real to begin with. So, thanks for that.
So right, so right.
Yeah. So I'll start with, actually, for those of you that don't know, Ben wrote a note that said, "Burn it the fuck down." All right. So that's how. I mean, with the periods, it was like Hemingway type prose. But I try to not have feelings when it comes to macro markets. But that one in particular, I think you struck a chord with a lot of people, not just me. And maybe just expound on why you wrote that.
Sure. Well, I think you're exactly right, Keith, about keeping your emotions and your feelings out of investing. That's and I find that the feeling that you particularly have to keep out of your investment process is the feeling of, oh, I need to be right.
Mm-hmm.
Yeah, and I think you and I both know so many portfolio managers or investors who care more about being right than about making money. And when you are, especially if you're responsible for other people's money, either directly or advising them, that's a luxury that's not so easy to or not so appropriate to have, right?
Right.
So I'm in total agreement with you about keeping those emotions and particularly that desire to be right out of your investment process. The world is as it is, and we have to deal with that. Yeah. But to your point earlier about, frankly, being outside of the wall of being responsible directly for other people's money, it's been very important to me to find that independence, to find that freedom, so that I can write about, frankly, my opinion, my emotions, if it comes to that, about what's happening in our world, not just of investing, but our world of politics.
Mm-hmm.
So that phrase you're describing right there, burn it the fuck down. I first used that in my reaction to the Jeffrey Epstein's death.
Mm.
It was the first time, because my catchphrase before that had been, "They're not even pretending anymore."
Mm.
In relation to all of our politicians, all of our what we call in game theory missionaries, whether they're on CNBC or whether they're at the Fed or what have you, that they're not even pretending anymore. But it was really with Epstein's death, and to be clear, I don't really care whether it was murder or whether it was suicide. I don't care, right? What can't happen is for someone in federal custody to lose their life like that. And for me, that was a real catalyst moment of recognizing that our system, which I think has gone so far away from what I think we all believe in on this show, the power of democracy, the power of capitalism to make for a better life for all of us, to ensure liberty and justice for all. As quaint as that may sound, it was really in that episode that I realized, we've got to make some changes, some really significant changes within the institutions that, frankly, have led us down a path where capitalism and democracy, my opinion, are just a skin, a pleasant veneer above what are really what I like to refer to as the naked sinews of power. And so that's that's what I'm writing about now, and that's what I care about changing. And along the way, I understand that we have to protect our own investments, the wealth that we're trying to make for ourselves and our families, and I also understand that we have to deal with the world as it is, particularly when we're managing or advising other people's money.
Yeah, I mean, when we're talking about preserving or protecting people's family and or their wealth, I mean, I think of a lot of these things as one and the same thing, by the way. But I also think of it within the lens of free market capitalism. A Canadian who came to this country in the '90s, and it was a very different country than what you just eloquently described. And that's really, I think that's what the switch you turn people on. You've been one of a handful that have had the courage to do it. But again, you're talking about bringing, like, really going back to a place that at least most people would properly like America to be defined as. Is it, like, how far away can you be in the moment to get yourself, and can you get back? I think a lot of people are much more fearful of the answer on how long that might take than any other answer.
I do think it's possible, Keith, because what I want to try to achieve, and I'll focus on capital markets right now, is a return to the and it's crazy we have to talk about this, but the purpose of capital markets is as a transmission belt for private capital to go to real world companies doing real world things, where your capital gives you a real world fractional ownership share in that real world company doing those real world things. And it's crazy that we have to talk about that today.
It's crazy.
But it's just indicative to how far we've come. And I think the real acceleration here, this has been a process that's been going on for decades, but I think there's been a real acceleration in this transformation of capital markets into political utilities, where they are too important to fail. And by fail, I mean they're just too important to go down. Where we've transformed the meaning of capital markets from this, again, a transmission belt to get money to real entrepreneurs and real founders and real managers who are doing productive things in the real economy, right? We've moved away from that to the capital markets being a casino, to being a political utility where we need that guaranteed return, and that everything is designed to prop that up. It's sad, right? That's my main reaction to it. But I also recognize this is the world as it is. And so again, being responsible for either our own well-being, our family's well-being, or being responsible for other people's money, we have to deal with the world as it is. We have to recognize that this transformation is taking place. But at the same time, I think it's important to recognize that this is a transformation, and that there are steps that we can all take, I really do believe, to try to roll this back, to try to return to a much more, I believe, productive, healthy, happy world where capital markets mean what they're supposed to mean.
Yeah.
Right? As opposed to taking on this veneer of being a political utility.
Yeah, and some people think that has to be a legal proceeding. You know, I've had people say to me, well, they should just take the Fed to the Supreme Court and audit not only what they're doing, but the political utility of the conversations they have before they do it. You know, as you know, you've traded markets for a while. People are front running this political utility like you wouldn't believe, and making a shitload of money doing it, by the way. And when they lose the money, they get down on their knees and they want more and more and more of it. It's kind of an amazing thing to watch. Like you said, I would agree it's sad, but not everyone would agree with us on that, Ben. And I have a lot of clients, in fact, that they might be silent about it, but they hate it when I just say what I just said.
I totally get it. I totally get it. But to your point about what do you do? I really don't think that the legal approach is the right one. Or not the right one, not an effective one. Let me put it that way. And the reason is that, look, there is not, who has standing to bring that, and who's going to listen to it? Because this isn't a left political thing. It isn't a right political thing. Right. It's not. It doesn't break down on those guidelines, right? It really is a systemic thing of, I got mine, Jack, and I'm going to keep it and protect it. even though I think it really does hollow out the strength of our entire society. And that I really do believe is the approach you have to take, not a top-down approach where, oh, we're going to take the Supreme Court and we'll show those guys, right? Because that I don't think that's an effective path. There was a Scottish patriot back in the 1700s named Andrew Fletcher, and he said, "I care not who writes the laws of our countries, so long as you let me write their songs." And I think that's such an important observation. What we have to change, I think, in this country is not the top down, not try to impose a law on something that I think is really driven by these powerful institutions that frankly, you know, you and I have been and are still part of. Right. I think what's important is that it really requires a change from the bottom up.
Yeah.
A change in each of our willingness to participate locally in our community, to start singing a different song, right? One that really is one of making, of protecting, of teaching, as opposed to playing the game that, you know, we're told we have to play by our political and economic leaders.
What's amazing about that answer, and again, such an eloquent way to get to a better solution, is that that's what's happening already in our communities. I mean, one by one, if by only forced to do so, you know, you have 4 kids, I have 4 kids, mine are, I think, younger than yours, you know, riding their bikes around the neighborhood like they never did before, neighbors, you know, having real relationships, real conversations, no matter what political party they're from. You know, there's a neighbor that I have that has 2 dogs that will eat mine alive, and on the mailbox says that I basically fucking hate Trump. You know, but you know, I don't walk over and ignore him. I can't ignore his dogs. But you know, that's actually, I wonder if that, you know, in God's good grace, that's actually what happened, is that you have something like that lo and behold from the bottom up is actually already creating the change.
We've been very well trained by a society that, with this notion that our political participation has to be expressed in voting for candidate A or candidate B every 4 years, right? And I'm not telling you not to vote. I think you should vote. I absolutely think you should vote. What I am telling you is that that vote is the merest, smallest part of your political participation. And that true political participation, it always does happen from the bottom up. It always does happen locally. It always does happen with your neighbor. And over time, that expands. Your notion of who your community is, who your neighbors are, it really will expand. But it only expands through the doing. It doesn't expand by, you know, doing more tweets. It doesn't expand by, you know, watching more CNBC. Right? Those are the mechanisms by which we are trained. It happens by making those person-to-person connections and then doing something about it.
Yeah.
We all know we should do. We all know that.
Well, not everyone. I mean, some people are quite clingy to the way that we have. And you know, we can get into that in terms of, again, certain policies that have been designed to protect certain asset classes and certain classes of investors. I hate talking about people in classes. I'm the son of a firefighter. We never thought of ourselves as being part of a certain economic class. But a lot of this really, and I wonder if, and I'm not sure if you've read it or not, but Neil Howe, one of my partners here, our in-house demographer who wrote The Fourth Turning. And the fourth turning is a behavioral, but it's got the generational overlay. So in addition to what you just said, like we need to do, and I'm a big believer in that, deal with what you have and just keep doing every single day. It's a good way to live. But it's what they did. You know, it's the end of a generation abusing its power, political power. You called it political utility. Do you think that that's it? I mean, you know, Neil Howe's view was that this was actually going to end, not that, you know, he's Nostradamus, but I mean, he said it was going to end in 2020. And that's just primarily because that's the end of the rope for baby boomers unless they're going to be president when they're 95 years old.
Well, I think what Neil writes is so important, and it calls our attention to the cycles of history. Right, because what we're experiencing today, you know, there's nothing new under the sun. These humans, we're not smarter than we were 2,500 years ago, right? We're really not, and we still wrestle with exactly the same human failings as well as the human uh, drive and success stories, right? Fear and greed really are the eternals of markets, right? Everything else can change, our technology can change, that clearly plays a role. But I think what Neil points out, which is so important, is the what doesn't change, and that is the cycles of history. So I'm a big fan of his work.
Yeah. Well,
What I think is really but if making one important thing about this work though is not to treat it as a I'll call it, as you said, Nostradamus, as something that's written in stone. All of these cycles are different. The starting points, the catalysts, they're always different. What we have to do, what we must do, both in recognizing that there is a cycle to history, but also to recognize that we play a role in how that cycle plays out. When it happens, how it happens, whether it is and I don't want this, burn it the fuck down in the sense of a conflagration, or burning it the fuck down in the sense of a flame that sears out the cronyism and the corruption from the inside and from within. I think there are real differences that we can all make in how this cycle comes to pass, even if we all agree that, yep, it's the same as it ever was.
yeah, that's a real important differentiation. Like burning it, that again, the words get people's attention because there is
Right.
you're trying to get people to act, and that's essentially what you're saying. Now, when you go like when you think about this in its entirety, you're very interesting, obviously on many levels, because you're not like your average bird on Wall Street. You are a political scientist professor, then you went to Wall Street. So you basically did it almost in the reverse that a lot of people do in their life. I mean, you can see Dalio now is becoming a philosopher and everything else. I mean, after he did what he did. So people kind of do it in different ways. But you are fascinated with game theory, with narratives. These kinds of things. I wonder, when you look at the world today, and how short-term hedge funds have become, for example, and how quick the narratives change. I call it, macrotourism. I think many others call it the same thing. How do you think about that within your longer-term, lenses that you're always considering?
Sure, and in between being an academic, I left the ivory tower because I think, like you, Keith, I'm an entrepreneur at heart, right?
Yeah.
I mean, we just can't help ourselves. It's not a feature; it's a bug. And I think any of your listeners who share that entrepreneurial drive know exactly what I mean. So in between being a professor and then going into investing and running a hedge fund, I started two software companies.
Yeah.
And it's those three experiences, right? The experience of trying to build intellectual capital in the ivory tower, but being very frustrated by its lack of application, its lack of any energy or any sense of moving forward in the real world. Combine that with starting real world companies and understanding what it means to actually do in the world and try to make a success in terms of business, and then finally getting to Wall Street, where you see that entrepreneurial spirit, or what used to be an entrepreneurial spirit, on a massive scale. I think it is the reverse of the way most people come about this. And I think what it gives you is an outsider's perspective.
Mm-hmm.
I think it's possible to get that outsider's perspective from lots of different ways, right? So my path was not the only path. But I believe so strongly that to be a successful investor during periods of a fourth turning or during periods of enormous societal change, it's very important to be able to step back from the game you're playing in markets and look at the larger game that's being played in society around markets.
Mm-hmm.
That sort of external perspective, being able to step outside of the little game that you're narrowly focused on, I think it's so important to be a successful investor, to be a successful citizen, frankly, And it's the sort of thing that I really appreciate, and I know, Keith, in a lot of what you've done, which is having a perspective that really sets, here's our process for looking at investing and what we're doing. We're going to stick to that process, but it's within a larger context and being able to step outside of that. I think that's so important today.
Yeah, for me on that, and I appreciate that. For me on that, and I wonder if you do it differently, or if you do it differently. So I'm focused on the game that's in front of me. As the game changes on the front end of those cycles, like you said, they're reflexive, they're behavioral realities, they're nonlinear. You'd be quite arrogant to tell them where to go. But when they're going somewhere new, what I do quickly is I try to read a book every 10 days, quite literally, on the time series, the history. Like every day I wake up and I know that I don't know, but I need to try harder and find myself some context. And at least that's the way that I've done it. And what I find is that, because I'm not an academic, what I end up running into are a series of dogmas, right? Because I'm just trying to educate myself on the front end of it so I can get the bigger picture, using my process, obviously. But I'll run in steadily into headstrong dogmas, when I do it that way. Because by definition, a lot of authors and academics are just dogmatically anchored to that point in time or that preface.
So right, so right, Keith. That was one of the main reasons why I left academia. Because what I would say to you is that an academic experience is not valuable in the sense of, oh, I'm reading these received wisdoms, from the past. That's really not it. What an academic experience is so valuable for, and this is why I say you can capture the same experience, really, I think, wherever you are, it's giving yourself the freedom. It's giving yourself the time to question and ask your own research questions, right? To do your own thought process, to say, look, I don't know where this is going to lead necessarily, reading this book or doing this research, but it's a question that I'm trying to understand. It's part of each of our own exploration and journey to build both our knowledge about the past, as you're describing, but to ask better questions about the future and what's happening today. That's the what I think academia, or that experience, gives you, is the ability, again, to step back and to explore for yourself without being captured by any one dogma or the other.
Mm-hmm. Well, and I think I've called this many times a new dawn for Alpha generation in a lot of different ways, because the crowd and the consensus and the macrotourism of it all is as loud and as oversupplied as it maybe not has ever been. It's just like, to your point, there are amplifiers like Twitter now, for example. So these people were there. I just didn't quite see them or hear from them every day.
Well, I have a strong view on this, Keith. I think you're exactly right, and I do think it's louder than it's ever been. I think the only period I think the only period that comes close, in the sense of, again, I'll describe what I mean by when I say narrative, right? I think the only period that really comes close is frankly in the 1930s. And I say that because when you read the memoirs of, let's say, John Maynard Keynes, right, who we know is a famous economist, speaking of dogma, right? But he was actually a pretty darn good investor.
Yeah.
And he writes about that. No academic pays attention to those chapters. Those are chapters that would pay attention to that. But I think you'd find those are the most fascinating chapters to me, when he's writing about, well, how does one invest reasonably successfully during the 1930s, which was the last period of time in history when we had a backdrop of massive debt, when we had a backdrop of massive government intervention in the economy, different modalities and different methods for sure than we have today. But it was that same sense of untethering, where the fundamentals, our knowledge of cycles and the history didn't seem to matter, on any sort of, short, medium, or even long-term investment process. And so what Keynes wrote about, and this was frankly my own experience with my own hedge fund, was that what I thought mattered, whether it's looking at individual companies and their catalyst, or even trying to dabble in, or more than dabble, is what you call the macro tourism, what I was seeing and what I believed to be true in, I'll call it real world, it wasn't manifesting the way I thought it would in market world.
Mm.
And it's, my hedge fund experience is, and I think a lot of people had a similar experience. We started our fund, long short equity. We started in 2005. And we had great returns in '05, great returns in '06, great returns in '07, and we had great returns in '08. And '08 really made our career with the hedge fund. It's 20-something% running, slightly net long the whole year in 2008. And why? Because we had a very different perspective. We weren't immersed in Wall Street, and we were able to have a different viewpoint at that period of enormous change. But starting in the really the middle of 2009, it's like you went to the wall and you flipped a switch on our hedge fund returns. We flatlined, right? Our shorts got killed. Our longs worked, but they didn't work any better than the rest of the market. Nothing changed in our process. Nothing changed in the way we were thinking about investing. And we never lost money for clients, which I'm to this day so proud of. But our returns flatline. And so, you get to 2011 and we're making single digit returns for the last couple of years in an alpha generating vehicle. And, we made the very difficult decision. My wife, I think, still hasn't fully forgiven me for this because we were pretty big at the time, but we gave all the money back to clients.
Yeah.
Because our alpha generating process, again, we never lost money, but it wasn't working. It didn't have the same impact or meaning that it did before. And so what I was really tried to do in the last 10 years is try to figure out, well, what does work? What's changed? And this is what I mean by, I do believe what you're saying about the way in which the words, the narratives that we are told and its impact on markets really hasn't been ever this pronounced. And really the last kind of touch point you can go back to, I think, is the 1930s.
Mm-hmm.
So that's why I really focus on what I would describe as the role of narrative. I would call it I'll use these kind of academic terms. I used to be a weak form narrativist, meaning that, oh yeah, narrative and what happens on CNBC and what a politician says on Bloomberg. Yeah, that may be important in a very short term, but very quickly the real world and earnings and macro events, that's what'll make the difference in markets. And I went from being, I'll call it this weak form narrativist to what I'll call as a semi-strong narrativist, meaning, well, actually, these narratives can overwhelm reality for pretty long time, but ultimately reality will win out. I got to tell you, Keith, I've become a strong form narrativist today, meaning that the impact of narratives and the forward guidance, for example, with monetary policy, the CNBC talking heads who get up there and they shake their finger at you and they tell you how to think about the world. The power of this now augmented with, as you're describing, social media, augmented by the 24/7 nature of financial news and political news. I now think this can go on for a long, long time, which gets back, I think, to your original question of, well, what is the timing of these massive shifts in markets and how long do we have to play this game of capital markets being a political utility? My answer is probably for quite a bit longer yet.
Yeah, well, I mean, a lot of people, whether I like that or not, that is the game that we're in, and that's the game that I'm playing. But still, like I said, there's a lot of. I find that it's weird to say, but I actually think it's easier to make money in markets like this with a lot of noise than any other kind of market. I mean, volatility to me is a good thing, and it sounds like that's why you guys did well in '08 as well. I mean, '08, to be up in '08. Well done, by the way. It means that you have to be able to embrace the nonlinearity of volatility and understand that you don't even have to be grossly exposed to the market to pick the right parts of it and the right companies. And there's an anti-fragility too of the 1930s that I think is interesting that's developing here, not only at the human level, but obviously on the things that they create, like the companies. And that, like, how much of that do you think about? Not to use, to borrow Taleb's word, obviously on anti-fragility, but you're seeing that's what's developed: the fragile and the levered, which are one and the same thing, and the anti-fragile, and those are flush with cash that are actually growing in this period.
Well, so I'm a big fan of Taleb the writer. Of course he's blocked me on Twitter, so he's on a personal level, Taleb can be not the easiest guy to get along with, right?
Yeah,
But
there would be our teeth are actually showing in this conversation. I think you'd be scowling at me like he'd be using F-bombs. Anyway, but he comes up with some good shit.
Well, for sure, for sure, and look, my field in academia was statistics and that statistical analysis,
yep.
And so Taleb comes from the same background, and so we are in violent agreement on everything he writes about how we assume these small tails on the distributions and everything he writes about fragility and black swans and the overuse of modeling, I'm in violent agreement with everything.
Well,
he says.
that's your problem. That's why you get blocked. There's only room for one Taleb in Taleb's mind.
That is so right. But here's what I would say though, Keith, in terms of the fragility or lack thereof in the system, right? Which is that there's so many aspects, particularly of our political system today, that I think are terribly fragile, right? And in a larger sense, I think there's similarly a fragility when it comes to monetary policy in this country. But and this is such an important caveat, I think that all of the policy developments in every central bank, right, not just the Fed, but really led by the Fed, all of their policy initiatives have been to build a wall against deflationary shocks, because that was the shock of 2008 going into 2009, that with a nationwide decline in home prices in the United States and the $10 trillion worth of financial products that were built on top of that edifice, you had an enormous deflationary shock, which again, to my words, stripped off that pleasant skin of capitalism and democracy to reveal the naked sinews of power beneath, and there was a real risk of those true power sources not surviving, right? So I think that what the system has developed over the last decade is this phenomenal array of whatever it takes instruments to prevent deflationary, meaning financial asset price declines of a large nature, right? And so even this sort of deflationary shock, the shock of a pandemic, which outside of a thermonuclear war, I can't imagine a greater deflationary shock than what the world is experiencing today. I believe that the arsenal that central banks have developed against these sort of deflationary shocks will be successful on its own terms, meaning that it will, and we're seeing this today, be largely successful in preventing financial asset price declines of a system-shaking nature. Right? Where I think this arsenal is quite fragile, however, is not for deflationary shocks, where I think it's very strong, but for inflationary shocks. And I know it seems crazy to talk about inflationary shocks when you have an unemployment rate that's going to go to 20+%. I know it seems crazy to talk about inflationary shocks when you have a decline in global trade, as we're clearly experiencing with this pandemic. And yet, I absolutely believe with the, I'll call it the unholy merger that we're seeing today between the Treasury, the U.S. Treasury, and the U.S. Federal Reserve, where today I think today the Fed started its bond purchases, right?
Yep.
Where, and this is, I can't, you really could not have said this with a straight face in 2008, the last time we had such an enormous crisis. But the Federal Reserve is going to start taking credit risk of corporations.
Right.
Right? The Treasury has always said on these muni bond purchases that the Fed's going to start doing. The Treasury is saying, oh, we're going to take the first loss position on these things. I mean, this is the creation of a Bank of the United States, right? Going back to Hamiltonian and Jacksonian days, where the United States government is now in the business of printing money, spending money, taking, risk, right? Taking economic risk in the economy. It's something we've never seen before. And my strong view, it's not a 2020 event, may not even be 2021. I think it may be 2021. But I think that the inflationary shocks from this are enormous, undeniable, and that the system that we've established since 2008 is anti-fragile, is quite fragile, right? Is incapable of dealing with those sort of shocks. And so that's where, to get around to that question you were asking before, when does the turning happen? When does it all change? I think that's when it all changes. When the policies that we've built up over the last, going on 11 years now, prove incapable of dealing with the political changes that come from this marriage of Treasury and Fed to create a true Bank of the United States.
Well, I think even the MMT crowd themselves, the academics and otherwise, would ultimately agree with your conclusion there. It's all good. You can merge. You can have this unholy marriage, this Henry VIII type setup between the Treasury and the Fed until you have a certain level of inflation. Then we're going to change how we think about it or change what we do, whatever they say. But the whole point about inflation, if you have economic stagflation and inflation's perpetuating that, is of course the people get pounded again, and then they get more and more pissed off. So demand falls, corporate profits are falling. Yeah, the prices are rising, but you don't get. And again, this kind of harkens back to the very low multiples that actually equities and credit get when you get a chronic kind of a stagflation. Do you agree with that? I mean, because there's different. You can have. I call it in my 4-quadrant model. You can have a beautiful inflation, quad 2, both growth, real growth, and inflation are accelerating at the same time, or you can have quad 3, which is what I just said was stagflation. Like, what are you saying it would be, or are you saying either?
No, I am saying that I think the stagflation. Look, and this goes back to what we were talking about at the very beginning, where it's important not to let your feelings, get in the way of your analysis of this stuff when you're responsible for other people's money. And I'd always kind of relegated the stagflationary scenario to, oh, that's just you being, pissed off at kind of this corruption of capital markets, and what are you talking about? I at this point now, though, Keith, the stagflationary scenario has gone from my edge case, something that, okay, there's kind of a trivial chance of that happening, but let's not go beyond that.
Yeah.
Frankly, that's now my base case. That's
Mm-hmm.
now my base case scenario. Yep. Once we have the 2021 either Make America Great Act, if Trump is reelected, with $2 trillion worth of, infrastructure spending that's monetized by the Fed, or if it's, Biden or the Democrat, it'll be the Green Act or the No Malarkey Act, for all I know, right? if it's Biden. But in both cases, it's going to be the same damn thing, right? Yeah. It's going to be $2 trillion worth of, building ziggurats and, filling up potholes that will be directly monetized. I think at least half of that directly monetized by the Fed, and we go down this path where you can't unring these bells, mm-hmm. And so, my strong belief then is that what you end up with is that, to your process, your nomenclature, that quadrant 3, it's where mediocre growth because you've pulled forward growth now for decades. There's just no, investment in actual productive activities. You've transformed your capital markets again into a utility, not a way of channeling capital into to real productive growth.
Right.
And at the same time, you of course, the United States will be the best house in a terrible neighborhood. We're all going down this MMT path,
Mm-hmm.
and so what you end up with is a global stagflationary environment,
Mm-hmm.
which again, as you say, just accentuates the wealth inequalities that have been built and exacerbated, yes, over the last 40 years, but particularly over the last decade.
Yeah, that points many good points within the point though on productive growth. I mean, actually back
Yeah.
to your burn it the fuck down point. Anybody knows that if you burn something down, you do have an opportunity to rebuild something new, particularly if it's with new capital, with new leadership. That whole part of capitalism gets missed in this whole, maybe not missed, but I mean, it's certainly not the consensus. They're like, okay, it's fine. We'll just have these, like you said, these utilities where we never burn anything down, therefore you can't grow anything new. And that's to me, that's obviously a major problem in the loop that we're in. But like you said, now we're into the, I guess, trillions are starting to add up. So you do $3 trillion here, and now the next bill, Pelosi's bill, I think she's going to have to try to go first, 1.5 to 2 trillion there, and then another 2 trillion there after we see who gets elected. It's an incredible amount on any historical measure. Amount of deficit as a percentage of GDP or debt as a percentage of GDP. I was showing a chart last night. We're actually in the number 2 position, chasing the Japanese on that front, both on the deficit spending and on the debt. How do you think about that? And is it just
Well, here's what I don't think, Keith. What I don't think is that there's this aha moment where suddenly some bell rings in the heavens and the bond vigilantes of the world say, "Oh my God, this is too much," and we're going to require that interest rates start to go up in the United States, right? That is not what I'm saying at all. Right. In the absence of a political narrative to say, "Oh my God, this is terrible. Our interest rates are going to go up." That doesn't happen. This is what I mean about being a strong form narrativist, right? And so that's not at all what I'm saying. I don't think that the catalyst here is oh my God, interest rates are going to go through the roof because the world is going to say, "Oh, the United States is a bad credit risk," right? Again, the United States is the worst house in a bad neighborhood. Where's your strong money or sound money, alternative? The ECB, please. Are you kidding me? Right? So that's not what I'm describing as the path that this takes. What I'm describing is the path you're alluding to about the zombification of an economy, as you've seen in Japan, as I think we are increasingly seeing in the United States. It's not that all this money that's being pulled forward creates some crisis in the bond market, like you might see, I don't know, in Argentina, right? What it leads to is this long gray slog where we aren't experiencing real growth. We're just not. And what real growth we are experiencing is being sucked out by the 0.1% to lead us to a world of bread and circuses and a world where the divide between the haves and the have-nots just gets more and more entrenched and onerous,
Yeah.
right? How does that change? Well, frankly, it changes when you have a real world event like a pandemic,
Mm-hmm.
right? That can change it.
Yeah,
If it's not that, it'll be something else like that. Ultimately, I laugh about being a strong form narrativist. That's my market view. That's my view as an investor. My view as a citizen, as a human being, is that these real world events, this is how the chickens come home to roost. It always ultimately boils down to politics. That ultimately we will change, but that it comes from the bottom up, not from the top down.
Mm-hmm. I love that point. And also the point on Japan. A lot of people that are, again, they can get scared out of their minds on debts and deficits, but they often equate it to, oh my God, Treasury yields are going to explode to the upside and the dollar's going to burn. Yeah, that's probably the worst position you could have had this year throughout this period. But again, the Japanese have had economics, nothingness for a long, long time. Some of them call it economic harmony, by the way. And you've never been paid on that short position in Japanese government bonds. I'm not saying that I'm going to own treasuries forever. I mean, in fact, I short treasuries when you're in Quad 2. Quad 2 is when the economy is legitimately accelerating, real yields are rising, and that's where you would get rid of that type of thing. But I do get, a lot of people are like always. I guess there are a lot of newsletter writers that still make a living on this. Is even the bond king himself has been saying bond yields are going to go up, back to when they stopped going up in Q4 of 2018. So there's a lot of noise on that.
Well, Keith, and what I would say is that on the way to Quad 3, right, stagflation, you will absolutely develop a Wall Street narrative that we're in Quad 2, right? That oh man, this is the best of all possible worlds, because that's what Wall Street does. You develop narratives and stories that get people to buy. Right. So you'll have your chance, right, on the to do whatever you want to on the bonds in the Quad 2. I do think the reality is that stagflationary world. Yeah. One last point about Japan. I don't think that what Japan is doing is in terms of the way it's handled its monetary policy, its fiscal policy. Look, I get it. Japan is a country that is literally dying. And I say that not pejoratively. I mean that from a demographic perspective. Yep. I mean that. And so the course that Japan has taken, I don't think is off base for, I'll call it kind of end of life care, right? Thinking in terms of long periods of time for a country. I don't think that's the right policy for the United States. I have to believe that real growth, real productive growth, is still possible for the United States. Mm-hmm. I truly believe that in my heart, and that's why I get so sad when I see our policies following this path that puts us in a position where real growth is next to impossible, because we are pulling forward so much of the consumption and everything else from the future, real economic growth from the future, to try to plug the hole of this deflationary gap today.
Yeah. We're going to take some questions, so please fire them in the queue. They're going to get voted on, and I'll ask them. But on that point, before I take the first question here, Ben, I think like what I heard too was a father speaking. Because, when you have millennials or kids that are younger than that generation, you do think about the future. We do have a demographic curve in that cohort that is upward sloping. That is quite unique in this world. The UK has one, just by virtue of having an immigration policy. Yep. Canada's okay. But again, like if you are quite, like you said, you're not saying pejoratively, I mean, quite literally dying. Like in Italy, the compound 5-year CAGR for the 35 to 54-year-olds in Italy is going to be -2% for sure for the next five years. They're dying, right? But if you're growing and you have to grow into a world where there's no way for you to become who your parents were from a capitalist perspective, that is the worst. That's the worst thing I could possibly imagine for our kids. It kills me.
You're so right. You're so right, Keith. And what I find in there's, how to say this, the audience I have with Epsilon Theory, and we've got about 100,000 email subscribers and some multiple of that. Awesome. On the website. Like, thank you. It skews young.
It does.
It skews young. It's not the grumpy grandpas. It's not who are saying this, those darn kids, right? It skews young, because what I find in my own children and what I find, this is why it's so energizing to me, is that I find the millennials and the younger than that, they get it. They really do get it, and they're not angry, right? I'm the one who says burn it the fuck down. They're saying, no, I want a chance to make a change.
Yeah.
And that's why I think it's so important to provide new venues, new narratives, new stories to harness and to try to not lead or organize that energy, but to show a path, of real growth, not this fake growth and that we've kind of trained ourselves to accept. I'm very actually I know it doesn't come across that way in my writing and because I am angry. I am angry about a lot of things, but I'm also very hopeful.
Yeah.
I really am very hopeful, and it really is that energy and that determination of my children and your children that I think will get us through this.
Yeah, I mean, it's anger is an important emotion if you want to get to the other side. I mean, to use people's current vernacular on narratives, the other side. You should hear me yell at my dog. Yeah, I'm angry, but I want the guy to start to behave. Okay, first question, actually, the one that's got the most votes here, Ben. We only have the 10 minutes, unfortunately. I could talk to you for hours. But it's not even a question. It's actually no question, just a thanks to Ben for all of his work providing PPE to frontline workers. So agreed.
Well, thank you. And I do want to take a second on that because we are making I think a very successful effort at getting PPE, personal protective equipment, masks particularly, straight into the hands of the doctors and the nurses and the EMTs and the firemen who need it so desperately. And to date we've raised a lot of money. We've gotten more than 60,000 N95 masks to more than 600 clinics and hospitals and fire departments all across the country. I mention this because this is what I mean about bottom-up action. Mm-hmm. We can all do this, yeah. Right? We don't need to wait for somebody to organize us. We don't need to wait for some politician to tell us, oh, do this and don't do that. We don't need any permission. We know it needs to be done, and we can all make a difference in this respect. So thanks to the person who wrote in as an opportunity to encourage everyone to do.
100% do. That's John Boyd 101, by the way, the Mad Major in OODA loop. Start with doing, so that's important. Here's a long question. I want to know the answer to this selfishly. Keith sees the world through a mathematical lens. Ben, can you talk about epsilon theory's natural language processing and how you're framing narrative mathematically? How could narrative machine work in concert with a quantitative signal like Keith's?
Great question, and I'd love to explore that with you, Keith, at some point. Yeah. So, again, my background is statistics and math and the like. The world we live in, as we know, is you can apply those math and those techniques to the data that you collect in the world, and it's like the old story of the guy looking for a lost quarter, and he's looking for it underneath a street lamp, and the person says, "Well, is that where you lost the quarter?" And he says, "No, I lost it over there, but the light's good over here." and so we have these very advanced mathematical techniques and statistical approaches, but it all boils down to what are you applying it on? What's the data you're applying it on? And so what we've done for hundreds of years is we've applied it to structured data. We've applied it to the things that we can count in the world, right? To what we can put on a spreadsheet. I'm old enough to remember Lotus 1, 2, 3, right? When we were, oh my God, we got a spreadsheet now. This is fantastic, right? So, everything you get off of Bloomberg, it's in the form of structured data.
Yep.
What I'm trying to do in our research program is trying to apply these same old math techniques that have been around for decades, right? But to apply it to things that are a little harder to count and to measure. It's what we refer to as unstructured data. It's all the words that we hear on CNBC at a given day. If you can imagine that, right? It's all the words and articles that are published and Reuters and Dow Jones and the Journal and Bloomberg on a daily basis. It's a big data problem, but today, and this is really been the revolution for my research over the last 3 or 4 years, because these are techniques that I was trying to apply 30 years ago in my doctoral dissertation. But today we can plug into AWS, to Amazon. We can plug into Azure from Microsoft, and I can get as much computing processing power as I want. It's like plugging into the wall and getting electricity. So the calculations we're making, the math we're applying, it's not complicated. What's different today is our ability to have all the words, right? All the words are available in a data feed from like
Yeah.
Dow Jones or LexisNexis. And then just the processing power to do the calculations on it, it's all there at your fingertips.
Mm-hmm.
So again, this is why I'm hopeful that we can turn the tools of technology and science to understanding our world better, and to see how narratives are formed. It's like having a microscope and putting in the 1700s and saying, oh, I wonder what this, drop of dirty Thames River water looks like if I put it under this new machine I built, the microscope.
Yeah.
And you look at it through the microscope and you go, oh my God, there's a whole world alive in there.
Mm-hmm. And I think
that's the research I'm trying to do, and I think it's a great marriage with the sort of structured data analysis that I know you do, Keith.
Yeah, I think that is the I was citing a book this morning called the Future Happens Faster Than You Might Think. These are the guys that wrote, or at least that give out the X Prize every year. But everywhere you look, we're on the edge of things like that. A friend of mine, Dr. Richard Peterson, wrote Inside the Investor's Brain. He's really focused on memes, word threads, using predictive tracking algorithms to drag that out. I think there's a great collaboration there. So, I will talk to you. I will take you up on that, by the way. Well, I have time for one more question here. And I knew we were going to get this question because we haven't really addressed it. But this is from Eric. What specifically will it take for the dollar to be toppled and from no longer being the world's reserve currency?
It'll take a world war that the United States loses. I can't say it any stronger than that, right?
That's the shortest answer that I've ever been able to hear on that one. I like that. I'm gonna use that.
There you go, man. The dollar is part and parcel of the United States military might in the world. I don't know, a better way to say it than that. It's the old saying, that governments today are insurance companies with an army attached to them. And that's what the United States has become, an insurance company with an army attached to it. And its scrip, right, is the US dollar. So
mm-hmm.
you gotta either knock out the insurance company or you gotta knock out the army.
Yeah,
for that script to have value.
On that, I have a follow-up question. Another book I just recently finished, which is a history book called The Splendid and the Vile. It's a great book about that moment, and that particular moment of risk and time, and London against Berlin. And I was trying to make the analogy between Washington and Beijing. A lot of people, we've had Thucydides' Trap, which is another book about rising powers attacking existing powers. A lot of people are getting a little closer on this, and this might be a big last question to ask you on this ultimate rising power, China, again, because that would be ostensibly not ostensibly, but again, that would be the potential threat there if you were to have a world war, is to have the Chinese currency and the Chinese themselves beat up on the U.S.
Well, so I can give you some examples of power transitions, as we call them, that either don't happen. Like, if you'd gone back 40 years, you'd be talking about Japan Inc. and Japan going to, pass the United States as the largest economy and the most important economy in the world. That didn't happen. Obviously Japan fell back. Mm-hmm. And so there wasn't that sort of power transition. There really wasn't a risk of it being violent in any respect. You can talk about the power transition between the United States overtaking Great Britain, right, around really after the U.S. Civil War, call it the 1890s and the like, the 19th through the First World War, where you saw the United States really come into its own as the global superpower, right? So I can give you examples of peaceful transitions, mm-hmm. transitions that don't happen. They're possible. They're still peaceful, but to your point, I can also give you examples of transitions or near transitions that end up in war. What I would say right? And again, it's similar to you're talking about the fourth turning and Neil Howe's work. Absolutely, there are cycles in history. Absolutely, there is a recurring pattern of what we call it hegemonic powers, superpowers, and the countries that rise in power to try to challenge them. It's not preordained, it's not certain, right, that ends up in war and military conflict.
Right.
That can absolutely happen, but it's not preordained. It matters how we act, right? It matters the stories we tell ourselves, the narratives we have, the leaders we elect as to how this all plays out. And the last thing I'll say about this is let's remember that the problem with the Peloponnesian War, if we put ourselves in the position of Athens, right, the good guys, they lost that war. They lost that war. And it was because of their overweening pride, their sending of expeditionary forces out, in this case to Syracuse, their overextension of themselves and their hubris and thinking that they could control the world. I think that's the lesson we need to learn from Thucydides and the Peloponnesian War, is to avoid that overweening pride, that hubris, that of course we're the natural winners in anything.
That, I mean, for those of you where this hasn't kind of come across to you yet or not, given his wealth of knowledge, at some point said it's not Ben Hunt. I thought it was like Benjamin Franklin. You have that look, kind of look a little bit like the guy you're on. You have your own farm. I think you have a 45-acre farm you live on.
Yeah.
You're a good guy too. I mean, I think that's another thing that we need more of on Wall Street is people that can actually translate or at least go across the bridge between like, okay, here's what I want to do in the market, but here's what I want to do as a human being. And those can be, some different things, obviously, at certain points along that bridge. So, awesome having a conversation with you, man.
I've been looking forward to this, Keith. Thank you. Thank you very much for having me on.
Well, I genuinely appreciate it, and I know that the audience does too. I wish we had more time, but I promise to stop myself up because I rant too at an hour. So thanks for your time. We appreciate it.
Thank you, Keith.